Right, hi guys, just running through what needs to be looked at. Okay, going to go over the smart shares and what happened in the markets overnight and any sort of news I've picked out as I've listened through yesterday and checked this morning's news. So we had the Dow a little bit down overnight. NZX was up a little bit overnight, not much but still up, and S&P down a little bit just like the Dow. A little bit red overall, or about 50% maybe by the looks, and sectors: technology leading the way, healthcare, communications and services, and consumer cyclicals. Now if we go to, where were we, overview, and we click change the other way, see technology leading the way, healthcare, consumer cyclicals. Alright, so that's a good way of looking at what ETF to invest in. Technology, healthcare, possibly good choices. Fear and greed, was still greedy, 66, I think that's up from yesterday by 1 or 2. Here is investing.com. I've changed this to the NASDAQ, was the S&P yesterday. So it says we're still in a strong buy at the moment. Now we'll run through the ETFs. You can see a little bit more red, a little bit more green than red, but this is most probably today because we are now open, but I think we might be delayed by 20 minutes. So I've got to try and figure out a streamlined way of organizing this little process and get these videos out by 9. That will be the goal. So you can see that's following that previous pattern reasonably close, and once it meets this or breaks this previous level, there's quite a sharp increase. What's that? Large growth ETF. It's 11% return, 12% sorry on your money. In my opinion, 11% once you get through to the free air. Right, you just read it as you go. Australian financials heading up. I wish this chart just centralized a bit better. So these cash rates, if the market goes down, cash rates seem to go up. Bonds and cash rates. I'm actually going to delete these because they're just annoying. When there's a little bit of a market correction, apparently that appears to be a bit of fear come into some traders' minds, big traders, and they start buying bonds. Even though they're not getting any interest rate, it's safe for them. So that's about the only way I can analyze that at the moment. But I don't think I'll ever be buying bonds. You can see these patterns above. Reasonably a good pathway if you ask me. To follow, could do worse following previous patterns. Could do worse than following previous patterns and trajectories. Okay, so those are the markets. Nothing too drastic going on there. Right, New Zealand Herald. What I've picked out here, AMP CBD exit. Will more Kiwis work from home or return to the office? Well, I would imagine yes. Facebook are looking to have at least 50% of their workforce, which was, I think, 46,000 people work for Facebook at the moment. So it's a big money saver, of course, if you don't have to have a big flash office in the middle of town. Or you can rent smaller, because rents, as we know, are just ridiculous. Interest rates have done nothing but come down, but rents have done nothing but go up. So who's ripping people off? Landlords. Plus, with all their tax deductions you get from owning property, it's just obscene, if you ask me. Auckland CBD spending meltdown, fears of widespread retail closures. Yes, I imagine there will be. I think things have changed forever for clever, wise and forward-thinking companies. Alright? Like Facebook has just said, how he details it, Mark Zuckerberg, if you read it, I'm not going to read through it, but those employees that have a good track record, for sure, will be allowed to work from home, but their wages will be adjusted to wherever they're going to be living, to the, whatever it is, the relative comparison. So they're not going to be winning as far as financially, and they won't be getting free lunches like they do at Facebook. But at least you don't have to get all dressed up and get up 2 hours early and jump in the car and sit in traffic. It's going to be a much better lifestyle. So this is about the Fed. I think this was yesterday. Dovish, Fed sees no interest rate hikes for years. Will keep buying assets. Powell pushes back on criticism. He has put too much money into markets. Oh, it's hard reading, I tell you. So what they've been doing is buying treasuries to support the market, and they will be buying $22 billion worth of treasuries a week, up from $20 billion. Okay, so with interest rates staying low, it encourages companies to borrow money, and even individuals, I guess. So I thought it might be interesting to look at what the interest rates were worldwide. America is 0.25, New Zealand is 0.25. This is for the Reserve Bank. But if you want to borrow money, it appears that if you want a business loan, business overdraft from the ANZ, total per annum will cost you between 13 to 17%. So we're getting ripped off. ASB, 13 to 17% rip off. Okay, typical. If you want a personal loan, ANZ interest rate 13%, ASB 13%, and as you can see, but there is some cheaper rates. Cooperative Bank 7%, Heartland Bank 9%, Kiwi Bank 17%. I thought Kiwi Bank was supposed to be for Kiwis. Try and help Kiwis, be good to Kiwis. And they're ripping us off the most. Oh my God, nearly. Right, mortgage rates. About the cheapest rate I have noticed was if you fixed it for 5 years for 3% with the BNZ. At the moment, floating, it's 4.5%, and it sort of fluctuates between 3 and 4. So you might as well lock it in at 3 for 5 years if you can get it. If you're not already locked in, I suppose most people are, but might be worth looking at. Now what do we got here? The reserve. That's right, the Fed have announced that banks no longer require any reserves. Reserve requirements cut to zero. This is the bomb. So the Fed fire's the big one. Just read through that there if you want. But that's it in a nutshell. So again, that seems a little bit reckless to me. A typical United States move, one extreme to the other. After the 2008 they had to have reserves. Now they don't. New Zealand, you'll be happy to hear, still ANZ, ASB, BNZ and Westpac have to have $20 billion in reserve. Alright, so that's good news for us. We're not so reckless. If anything tends to happen, where does it happen? Anything goes wrong. Alright, so that's that in a nutshell. I'll leave you with the quote. Okay, here's one that seems to be quite applicable for this video. The financial industry is a service industry. It should serve others before it serves itself. Yes, well, if banks could possibly read this quote, they might learn something. How much money do banks make a year? Is it not enough? Oh my God. Alright, don't forget to like, share and subscribe if you like, and I'll see you tomorrow. Take care.